We are going to start today's session with a conversation with Sumant Mandal, co-founder and managing partner of March Capital. Sumant, welcome back.
Hey, how are you?
Good. How are you?
Good, good. Early in the morning, but nice to see you.
Yes. Well, let's catch up. Let's also catch the audience up on how you are living the pandemic, what's happening with your fund, your portfolio companies, what are you seeing, etc.
I think we've all become Zoom and WebEx experts is the one takeaway from this 1 year. And we have more meetings every day than we ever had before because everyone's available when you need them and want them.
Yeah.
Which is the good thing. The bad thing is that every day looks like the last day or the next day. There's not much change going on. So hopefully with the vaccine, now that we've all started to get it, we will start to see coming back to something like the world we were used to a year or so ago. But otherwise, things are good. And the world of technology is really booming.
Yes, indeed. What has been your portfolio's experience with the pandemic?
So, Rana, it's been interesting. I think the first 2 or 3 months, March, then April, May, people were a little confused and were worried about what's going to happen. So there was a pullback from spending, and people were just trying to figure out how do we keep our lights on, And I think about people when I say that this is about large enterprises and customers for our companies, which sell into these enterprises. But about 3 months, 6 months into this new world of sort of living from home, working from home, people realize that their needs for what we do, which is cloud-based technologies or SaaS-based technologies, actually is now a must-have. It's not a nice-to-have. So quite a few of our companies, not all, but quite a few of our companies saw their business pick up really well. And so I'd say Q4 was exceptional last year, and Q1 continues to show that people really need these new types of cloud-based values to keep their businesses going. It's not every business. I would say, obviously work from home technologies, collaboration technologies, video conferencing or whatever you want to call it. Cybersecurity, especially cybersecurity, which is cloud-based and the next generation of cybersecurity. Those kind of companies did really well. Companies that were doing transformation projects, automation, taking old workflows and trying to make them more intelligent, those had some challenges. I think people were focused on making sure that their lights are on and they can continue to serve their customers, not necessarily trying to save 5% of their operating cost in the CFO suite or stuff like that. Front office, which is sales and marketing and customer support, became more important than back office. That's the way I think about what has been my, I would say, understanding of how people have spent money or adopted new technologies over the last 12 months.
Yeah, I can imagine transformation. There's enough for transformation happening, so people are not looking to transform more.
Now I think that will normalize. I think over the next 12 months, we'll see. One thing is not going to change. I don't think that this idea of being in the office, which was so important to everyone, which is, even in our office, which is not a very large office, we would say, no, you have to be in the office to provide work. I think that concept has been challenged.
Yes.
Will people go back to office? Will people be back in work with each other? Yes. I mean, human beings are social and they need to be with each other, especially for something where you're trying to create something new. You want to be with other people and brainstorm. But it's okay to work from home as well. So I think that concept is definitely here to stay.
Well, we have run 1Mby1M as a virtual company, as a global virtual company. We are all spread out around the world right from the beginning. So nothing actually changed in our workflow. We don't do anything, in person. So our transition.
I would say that if you have kids at home, They are very keen for you to go back to office.
Yeah, no, I
Especially
think people are
teenagers.
having very, very hard times with small children in particular. Yes, absolutely.
Yeah. So, you know,
So let's catch up a little bit on the situation with March Capital. What size fund are you working with right now? What size checks are you writing? What is the focus of your investment thesis and so on? Just to level set.
Sure. So, you know, we are now investing out of our third fund. We're 7 years old this year, and we have a little over $1 billion or so under management. So we managed to raise our third fund during the pandemic, which was a very interesting experience. So meeting investors from all over the world like this, from your home office. But you know, it's been an interesting time for technology. So we've been lucky enough to be in an area where people have more interest than not. You know, let's say a year ago. So our new fund is $450 million. We did a final close on the fund December 31 of last year. So with a fund that size, I think our average investment is probably close to $20 million. So it could range from anywhere in a Series A from 5 million to a pre-IPO round where we are putting $40-50 million into a company, but average is 20 million. Our core focus areas remain the same: enterprise software, B2B, e-commerce enablement, which means fintech, payments, fraud, etc. Cybersecurity and industrial software. Industrial, which is IoT-driven software. So nothing much has changed on our focus area. I think we have seen our average investment size go up over the years.
And what, to write a $5 million check in the kinds of deals that you go into, what do you need to see as, you know, existing proof of market adoption or team or so forth?
I think it's really, when you're writing a Series A kind of investment, there's only two things that you have to have a point of view on, which is the quality of the founders, the team. And by quality, I mean, you know, have they done this before? Do they have the potential to build something of value? Are they capable of attracting talent? Because half of the battle in a startup is always people. How do you hire good people? And there's such a fight for quality of talent. It's you know, that's the biggest challenge I see in front of small companies. Yeah. And the second is, of course, size of the opportunity. It doesn't have to be an opportunity that's huge today, but what's your belief around it being large in the long term? And I think those are the two things that we focus on. And we don't do very many Series A anymore. We kind of look for a little more traction before we invest. But when we do, we are happy to do it just by ourselves and put in $10 million and buy 25-30% of the company and help someone succeed. So that's what we do.
You're saying that when you're willing to write a $5-10 million check on a concept, if those criteria are there. Yes. Interesting. That's not quite. That's not very usual these days, because people want the pre-seed and the seed guys to finance the company to, you know, significant traction before people are willing to write $5-10 million checks. So I think what you're saying.
That's also very much the norm. It's not to say that we don't do that or look for that as well. But if we know someone well, we've worked with them before, we think that they can build something worth billions of dollars. If it works, you know, I'm not saying it will, always will, then we're not afraid to do it by ourselves and write something in right away. And we have done
but the operating word there is somebody you know and somebody who's done it before. If it's a first-time founder, you want to see traction and validation before you write.
And so, you know, for the first-time founders, and you know TM Ravi well, that's what the Hive was created for. So as you know, I helped Ravi start the Hive as a co-founder 10 years or so ago. And that's the kind of venture incubator / accelerator you look for a first-time founder, to get some help and get some traction before we look at it from the March side.
Yeah, well, we work, at scale with first-time founders, so very
Great.
much
Yeah.
the same way in which we operate. Now, I want to probe something that you said about the scarcity of talent and the, whole game being about creating a team in a very competitive market. And there are so many startups the sheer volume of startups around the world is way larger now than it ever used to be. So talk to me a little bit about what your feelings are about virtual companies and remote teams. What's happening today, of course, is people are, coming up with unique and interesting ways of locating and leveraging talent in different parts of the world. And with COVID, all this has accelerated hugely. How do you view all that?
So I think for sure, the aperture through which now you look for hiring has become much larger. And geographic considerations are less important than availability of talent. We have a company that went public about 18 months ago in our portfolio called CrowdStrike, and it's a cybersecurity company, did very well. And that company, is now about 9 years old, but when it went public, 7 years. It from inception to going public took 7 years, which is extraordinary in these times. And part of the reason was that the founders really focused on building the company using collaboration technologies like Smartsheet and video conferencing, and did build the company without trying to focus on one or two campuses. Like they didn't want to, if they hired someone in the Midwest, or they hired someone on the East Coast, or they hired someone in Eastern Europe, they just tried to find the best talent and use new technologies as the framework through which the company was built, ground up. That works. If you try and have a company that's been built the old-fashioned way, and then you try and add on this geographic sort of collaboration, using collaboration, it's very difficult. For example, I'll give you a simple example. I'm on multiple boards, and today all my board meetings are done using video conferencing or something like that. And it works great as long as everyone is on video conference. But if there are 5 people in a conference room and there are 2 people on video conference, that doesn't work. There's no way for those 2 people to then have any say or point of view or influence any conversation.
Yeah,
I think so. Good point. So I think it's a little bit of a cultural, as well as very deliberate architecture for a company to either be geographically distributed or not.
Yeah, good point. The pool of talent has also broadened, right? I mean, even a little country like Uruguay now has a couple of unicorns. So, I remember a long time ago, there's a case study that we did. As you know, we do these entrepreneur journeys case studies on a regular basis. One we did, it was a while ago, were 2 founders that met on the internet, one from Ireland and one from Montevideo in Uruguay. So when I saw this unicorn from Uruguay, I was like, wow, really a little country has come up in the, in the process. Estonia, of course, is churning out unicorn after unicorn, and they've really become a startup nation, so to speak. So, there's some very interesting, talent sourcing and team structure, team architecture changes that are happening in the world right now, vis-a-vis how companies are being built. So I want to come back to another point that you made, which is about Hive. Of course, Ravi is a close friend of ours, and we've observed what he has done with the Hive. Now, my understanding of Hive is that it's an accelerator that's built with small capital, about $250,000 worth of capital, and it seeks very early exit for the entrepreneurs. Is that still your and Ravi's point of view, or are you
not
getting back?
particularly.
Just a second. Are you getting back to the more traditional model of being a feeder to the later stage venture capital?
So the way the Hive is structured, it has the ability to put between $2 and $5 million into a company over the life of the company. So it's not 250,000. It's $250,000 is the first tranche towards figuring out if there's a idea that has merit or not, which basically means one person's salary for 1 year. That's just the starting point. So the Hive can and will build companies for the long term, and has. Companies like Foghorn have gone out and raised $70-80 million and stuff like that coming out of the Hive. Now, if a company sells early, it sells early. Like we sold a company called Kosei after putting in $1.5 million into it to Pinterest, but then we had Pinterest stock and we participated in the Pinterest IPO. So it's done very well on that model as well. What the Hive is very different from like the Y Combinators of the world is it doesn't do classes of startups. It'll probably do 1 or 2 companies a year, and then really focus on building a company, building the right team, getting it into the customers, showing product market fit. And sometimes a company is in the Hive for 2 years plus before it goes out and raises a Series A.
Mm-hmm.
So I think the model has obviously, over time you learn and you adapt and you create new kinds of mechanisms. I think the key, again, for the Hive, for March, for anybody that you talk to, is going to be around how do you attract the right talent. That's for me. If you think about success and failure for these companies, everyone has good ideas. You could be off on market timing by a year. You could be off on stuff like that. Or technologies also generally work. It's not like you invest in something and it just doesn't work. It's how do you attract the right talent? And for Hive, it's a challenge. For us, it's a challenge. For our companies, it's a challenge. And I'm sure you hear this from all the entrepreneurs you work with.
Well, I think what we also see in what we call bootstrapping to exit mode of company building is a lot of acqui-hires. So we have sold companies in our portfolio in that mode, companies with very little bit of angel financing, and then going straight. And we sold a company to Qualys, for example, in this mode. And that is all about talent. If the company likes whether they're going to stay with the same product strategy or not, what they're looking for is the team. That happens a lot, as you know, in this business. So.
Yeah, but see, think about it this way. We have a company in our portfolio which is, let's say it's 250 people today.
Yeah.
In the first half of this year, they plan to go from 250 to 550. So they have to hire 200 people in 6 months. And it seems kind of like, okay, the only way you can do that is if you compromise on quality, because you can't really filter so many people through the system so quickly.
Yeah.
So that's where an acqui-hire of, say, 30, 40 good engineers or 20 engineers, and they're working on a similar technology or a similar, they understand the area that you're in and that can be integrated really quickly, makes sense.
Yeah, that's right. That's right. Okay. What are you seeing in the trends? Of course, remote work is a big trend, collaboration, etc. Anything else that stands out in this last, this continuity?
I think most people will understand it. The whole idea of the supply chain in any industry has been challenged over the last 18, 24 months. It was challenged first by the whole US-China discord, call it whatever you want to call it. But then with the pandemic, even the last mile, which is how how a consumer products company would think about its inventory or think about keeping a shelf filled with its goods in a store, has changed to how do I get my product to the customer's home, right? So if you think about logistics, you think about warehousing, you think about supply chain, you think about transportation, that entire supply chain has been disrupted dramatically, all the way from manufacturing So, your suppliers to delivery.
Yeah.
Completely disrupted. Big area for technical innovation and for technical, I would say, disruption. The second part of that, of course, is around, you know, payments. When you are, if you think about just how people used to pay and how they're paying for things today, it's a dramatic difference. I just did a panel on on sort of the global payments ecosystem, and I had a close good friend, Vasant Prabhu, who's the vice chairman of Visa, on it. And if you think about it, for them and their business, they've seen the debit part of their business go through the roof.
Mm-hmm.
Even people walking into a store would prefer to pay now with their phone than they would with something that they have to physically touch, right?
Yeah.
So cash payments worldwide are down by almost 10%. And so that's been a great sort of, I would say, shift. And I think, which is the reason why all these companies are trading at such high multiples, whether it's Visa or PayPal or Adyen or take your pick. That's changed.
Yeah.
I think the other big sort of change we see is around the footprint of cybersecurity. And if you're working from home, you're no longer inside the perimeter of an enterprise. So the whole framework around cybersecurity is changing. I think the next couple of years, the advent of 5G and the availability of a low latency, zero latency, high bandwidth network allows for a lot of different devices to be connected to the internet, which is the promise of the IoT world or the OT world, but hasn't quite been fulfilled yet. And so if you look, we had the CEO of Qualcomm at our summit a couple of weeks ago, and when you hear him talk about what 5G could mean, I think the next 2 or 3 years, it opens up a lot of potential opportunities, but also a lot of potential threats, right? So
Yeah.
I think those kind of opportunities always exist. I've been following quantum compute for a long time. I think there's a ton of opportunity in quantum, very far from being commercialized, but as someone who's interested in science, very interesting, right? Kind of defeats the laws of physics of what we learn.
Now, one trend that we are hearing about quite a bit from investors is, you've been around for a long time, so have I, and we come from this era in Silicon Valley where people would not invest in companies that are more than 15 miles away from them. And now people are investing without meeting people half the way around the world. So what is your current thesis around what geography you're comfortable with investing in?
So we have actually, as a firm, never been of the mindset that if I live in Southern California, I want to be a Southern California investor. And honestly, I kind of joke with people. I was with one of my investors yesterday. I've lived in Los Angeles, Santa Monica area for 20 years. And I've been investing now for 20 years, but I've only invested in 2 companies in LA. And all of my companies have been all over the world. Mostly, I would say, focused on either the Bay Area or India, because that's where I have relationships and networks.
Yeah.
So it's a little bit about, who do you know and where do you know them? And that envelope has expanded quite dramatically. And I would say even the opportunity set, as you mentioned, if you're thinking about Montevideo and stuff like that, has also expanded dramatically, because 10 years ago, there weren't such opportunities, right?
Definitely.
Right now, we are very deep in diligence on a payments company in Brazil.
Mm-hmm.
And,
Don't go to Brazil.
5 years ago, I wouldn't have thought of it, right?
So are you going to invest in that company if it passes all the other business due diligence principles without meeting?
Well, first, one of the board members we know really well. So it helps to have a relationship with someone who you trust.
Yeah.
Second, it's an area we know really well because we've done payments for the last 20 years. We were the first investors in my prior fund in PayPal. So we've seen that evolution of that ecosystem. Third, we have people around us who know Brazil very well and what's happening on the ground. I personally may not know it very well, but we have people around us. So that gives me comfort that at least we know what we're getting into.
Yeah.
If a random company, so we have a company that we invested in the gaming space in Berlin. Now, if it was a company building its business in Berlin, selling into Europe, where we have zero way to add value or understand what they're doing, we probably wouldn't have invested. But they were keen to open an office in LA and expand their footprint in the gaming universe in the US. That we would help, right?
Okay.
So that becomes more interesting for us because now we can help them. They know what we can do for them. They officed in our office. They opened the US office in our office. So we had some insight into what was going on. So there's always some angle why it's interesting, right?
Yeah, absolutely. And how to add value, how to manage the company also. I think, and you've very articulately explained what you're going to do with Brazil and what you cannot do with Berlin, perhaps, unless it's a U.S. market-facing company. Yeah.
So we have a list of, let's say, 100. It's probably more than 100, but let's say there's 100 companies that are developing SaaS software in India that we have been following now for the last year or 2 or 3, right? 25 of those companies we've had already interactions with. And their interest is, how can we work with a fund that can invest in our Series B or C or D, but then help us build a organization and build a footprint in the United States or in North America, and then expand our business. We've maybe generated $5 million or $10 million selling into India, not into Indonesia, into Vietnam, maybe even the Middle East and Europe, but we now need help to enter the US market. That's very exciting for us.
So, before we finish, after we finish the session today, I will send you a company from our portfolio. It's a cybersecurity company based in India, has already about $1 million ARR, but is potentially looking for an exit. So, since you mentioned that you have a bunch of cybersecurity companies in your portfolio that are looking to build potentially through acquisitions, that might be a good fit.
Please do.
Yeah. All right. Well, very nice to see you again, and
you too.
keep in touch.
Yes, we will.
Thank
you. Bye-bye.
Bye-bye.